Hello and welcome to our viewers on Crux Investor. We're here with Craig Parry, the IsoEnergy CEO. We're going to be talking to Craig about a bunch of factors happening in the marketplace. Look in the description below to see what we've talked about. Click on the relevant timestamp and that'll take you to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel and to see more videos like this, click the notification bell. Craig, how are you?
Good, Matt. How are you?
Not too bad. No, we spoke a while ago online.
Yep.
But you're now here in sunny London, literally sunny London for a change, actually.
It is. It's lovely.
At the WNA, meeting a few people. What are you trying to get out of it?
Well, you know, this is the sort of premier industry event, if you like. You've got everyone from explorers through to operators and customers here all together. So it's, you know, the thing to be at. Yeah. And of course, you know, banks and things all have a bunch of different dinners and things. So we all get together and that's fantastic. And also, you know, being in London, we take the opportunity to go and see some of our investors here and take some of those meetings as well.
Right. So tell me what the mood is. What are people talking about over there?
Sure. I suppose on the supply side, there's a sense of sort of cautious optimism. Okay.
Did you see the fuel report come out? Did you listen to that?
Yep. We saw the fuel report, and I think, you know, that the heart of that is that the supply side is probably pretty challenged at the moment. Demand continues to grow, you know, very strongly.
Right. Yeah.
So that's a very, you know, a real positive. But the supply side's where the challenges and where the issues are.
So macro story, great. We all get that.
Looking good.
You know, that's coming very, very quickly.
Yep.
Supply side, there's some games being played in terms of price discovery. We've got to work out how we deal with that. And we were talking before the camera started rolling about Cameco's need to supply quite a large number to the marketplace. So can you talk to that?
Yeah, that's right. And of course, that's one of the greater reasons to come to the WNA is that you hear so much of what's going on in the marketplace. And Cameco, I think, you know, confirmed to us yesterday that they need to buy £12 million before year end. And of course, you know, last year, in the last half of last year, they bought £4 million, and that was enough to drive the price from $17 a pound to $29 a pound.
Yeah.
So this year, you know, they've got to buy 4 times that. Price is currently $25, and spot uranium price is $25 a pound. So I think, you know, at some point late this year, assuming they go ahead with that program, which we know they have to because they do have long-term contracts that they need to put that product into, you know, we should see a much higher price sometime late this year, early next year. And of course, if they delay that, they've got to buy £22 million next year on the open market, on the spot market. Of course, it's a very shallow market at the moment. There's been very little trading there for the last 6 months. So, you know, scene set, that's probably the most positive thing I've seen for a long time. Okay,
if you extrapolate from last year's data, I guess for a explorer, developer, near-term producer, all great news.
Yep.
Okay, but let's park that because that's wishful thinking for now. Let's talk about you. Okay.
Sure.
When we last spoke, you said some good things going on, fairly early days. You know, spun out of NexGen. You were at NexGen. You're in the right part of the world. What, being the Athabasca Basin in terms of high-grade deposits, what have you been doing since we last spoke?
Yeah, so, and just on that, the Athabasca Basin, look, when we started the company, we cast the net far and wide all around the world looking for uranium deposits and assets.
And then we're next door.
And then, that's right. We keep coming back to the Athabasca Basin because it's home of the highest grade uranium deposits, the biggest uranium mines in the world. So we always end up back there. And of course, midway through last year, May last year, we acquired our La Roque East property off Cameco. That means, you know, we pay...
He's a shareholder, right?
Shareholder, yep.
Big one.
I'm at the end of this interview, I'm off to see a couple of the guys there.
Yeah.
Big shareholder, 5.4% of the company, and they got that holding through deals we've done with them. So they've been willing to do deals with us. We acquired that La Roque property in May last year. We had a drill rig out there 6 weeks later. We announced the discovery hole 2 weeks after that. So we went from sort of conceptualisation deal to discovery within 8 weeks, which is a tremendous outcome. And we've been there drilling ever since and putting out some very, very good results. We just completed our summer campaign. We drilled another 17 holes on the property. Some very, very good results, you know, sort of I think probably the best of those holes was 7 metres at 5.4%. So, you know, really spectacular, high grade Athabasca style uranium mineralisation. So we've just kept you know, working away at that. We've now defined a mineralised zone there that's 500 metres long, about 40 metres wide on average, 5 metres thick. So very much typical of those sort of unconformity related deposits. And the plan going forward, come winter, we'll have probably another drill rig out there. So we'll go from, you know, moving up from one drill rig program to two.
You've identified targets. Are they near each other? Or are they separate?
Yeah, good question. We've got some infill drilling to do. We haven't closed off many of those sections, and we've got a 250 metre gap between our sort of the easternmost hole and the heart of the deposit. Right. So we've got to do all of that infill work. So that one rig will be working on that. And then very, you know, to my mind, possibly the most promising thing we saw from the program, we got the results of a resistivity survey back which we did earlier in the year. And that shows about 500 metres to the east of the Hurricane deposit, a very large conductive anomaly, typically associated with the graphite that hosts these deposits. We drilled one hole on the edge of that, got some very elevated radioactivity, 50 metres up above the sandstone, and you know, very strong geochemistry, very strong alteration all the way up the sandstone in that hole. So we're very excited about that. We think we could sort of be on the edge of something very, very significant. Certainly, you know, that hole looks a little bit like the discovery hole at Hurricane. So, you know, that second rig we've got out there, we'll have out there. We'll
so how much cash are you sitting on at the moment?
We've got about 2 million in the bank.
Right. So what does that mean for you?
Yeah, look, and we finished the year with a little bit under $1 million in the bank.
Right.
At some point we'll have to come back to the market and raise some money. At this point in time we're pretty well funded. We've still got NexGen there supporting us. NexGen's, you know, the mothership, if you like, 54% shareholder.
But they've got their own priorities, haven't they?
Got their own priorities, but plenty of cash as well. You know, Lee's sitting on.
So they will follow their money. They'll retain their current position.
Yep.
And then you're going to go to market, or are you going to Cameco?
Well, you know, we'll certainly talk to them. I think, look, NexGen, you know, Lee, a little bit tongue-in-cheek, likes to say that IsoEnergy will pay for the capex of the Arrow development. You know, that's $1 billion. So, anyway, so you know, Lee's very, very happy with what we've got here. And of course, when we started NexGen, we wanted to become a major player in the space. You need more than one deposit, I think, to do that. So having sort of options and alternatives there, you know.
But so you're going to go to market. You've got to raise some cash. Have you any sort of sense of what you want to do? So what's the thinking? What's the plan for the next 6 months? Assuming nothing changes.
Nothing changes.
Price-wise, right? So it's expensive money. So how are you going to manage that?
Yeah, good question. I think, of course, very sort of simple stuff initially. We have to sit there and assess those results we've got from this program. We only just put out our final announcement from that last week. So we'll look at all of that data and then work on a plan and a budget that approaches the deposit optimally between a mix of infill, resource delineation drilling, and then on to exploration and following up some of those other targets. That's the focus for us at the moment. You know, we'll continue to try and pick up other properties in the.
But what's happening? I'm trying to get a sense of how do small companies survive, either by keeping drilling. How do they pay for that?
Sure.
Do they rein things in until the price discovery comes back in the marketplace? Because you're nowhere near exploration, you're going to have to raise capital, but it's going to be slightly cheaper if you get some sort of bump in your stock. Yep. Which I know you've had a little bump since the last time we spoke, and then it's come back down again. So you know there's some potential for movement there if people hear the right things. So what are you doing to influence share price to reduce your cost of raising capital?
Yeah, look, very good question, and I guess. In our corporate presentation, if people go to our website, isoenergy.ca, you'll see one of the most prominent slides early in the deck is NexGen share price chart. Of course, we started that company at a 5 cent capital raise, and it's now trading around $2 a share.
Right.
The point of all of that is discoveries still matter. And I think IsoEnergy is one of the very few uranium companies that is in positive territory in terms of share price for the last 52 weeks off the back of that discovery. So it's not going too bad on that front. Of course, you've got to get out there and explain what you're doing to the market. There's a little bit of apathy or,
But they're going to ask you the same questions I'm asking you, which is what are you going to do to be able to capitalise your program, whatever you decide that is, over the next 6 months, or if you want to raise enough for 12 months, because there's no certainty about price discovery, right?
No.
It could be 3 months, could be 6 months, could be 18 months, right? We just don't know. What are you planning to get you through? What are you planning to do to get you through, or to be able to raise capital to get you through to whatever point in time where you're putting that flag in the sand?
Sure. So, well, we're in a fortunate position that I think our association with NexGen, the fact that we've got Lee on the board, we don't have much trouble raising capital. We've got very good support by the market, so we're okay on that front.
So you can go into the market regularly, so you're not diluting unnecessarily, because the market goes in 6 months and you've raised all you need for the next 12 months now. That's expensive.
That's expensive, that's right.
And you've got NexGen in there for circa 50%?
Yep.
Right? So that's good. And it's a good brand, Cameco's a good brand. You've got all these good brands, and you've made a discovery. So lots of good things happening.
Absolutely.
I just want you to tell me what your thinking is for the next 12 months to help people understand why you versus someone else.
Sure. So, and I suppose, to go back, we've got to assess all of that information before we have a clear plan. Sure. So you've got to do that work before you come up with that plan. I think that'll happen over, we've got the full exploration team coming to Vancouver in a couple of weeks' time. We'll sit down and go through everything in detail then and work out an exact plan and budget. But, a bit of a sort of a thumb suck as to what we might do. I would say that we've now drilled about 30 holes on the property. We did 17 holes this last program. That program cost us about 2.2 million.
These are all quite shallow holes.
Quite shallow holes, yeah. But you're down to 350 metres or thereabouts, 400 metres max.
Which is fine. Right, okay.
Not bad. We drill a little bit deeper into the basement than some of our competitors because we are looking for that basement-hosted arrow type deposit below everything that we've got there. Another one of those would be fantastic. But I'd say, look, we want to have 2 rigs on the ground. I would think that a 2-rig program, we probably want to spend somewhere of the order of $5 million over the next 12 months on exploration through to the end of next year.
Brilliant.
So we've got to raise that sort of level
Plus
of money
GNA,
at some point,
etc. Right.
Yeah.
So that gives us a sense of the quantum involved, and and clearly the dilution involved. That's what people are looking at. But at the same time, you're talking about the opportunity of creating value by these sorts of sort of data that you're gonna come back with. Okay. And remind me again, you are entirely independent of NexGen. I know you speak with NexGen, you're ex-NexGen, but what you decide to do, that's your decision.
We are,
even with a 50% shareholder, they're
completely independent, arm's length.
Okay.
Notwithstanding the fact that we've got a number of board members in common. Common board members. So Lee Courier, of course, is our chairman. He's the CEO of NexGen. We've got Chris McFadden, Richard Patricio, Trevor Tearley, all on the board of NexGen. I'm a senior advisor to NexGen. I stepped off the board to focus on this recently. But there's a little bit of crossover there. But we operate completely independently, and we present our plan and what we're doing to the board every board meeting, and that gets supported and queried and supported on a sort of independent basis. So we have all of those correct governance structures in place. But having NexGen there and being part of that brand and following those processes that
helps with the pitch.
Absolutely helps.
Okay, and have those conversations started?
Well, they're happening all the time.
What, you're talking to people about raising money all the time?
Yeah, you're always out there talking to the
Right.
banks and investors. I guess that's what we're doing here in part in London. You know, one of our more significant shareholders is CQS.
Yeah.
So we'll be seeing the CQS guys tomorrow.
Yeah.
So you're out there talking to people all the time on that front.
So they know this is coming.
Yeah, there's always that expectation.
Yeah.
We do have a number of other opportunities, and I think when we last spoke, you know, we talked about are we at all concerned that when uranium prices rise and equities start to bounce back, you'll see you know, a flood of other junior companies, ex-cannabis companies change their name to uranium something. And as I said, then we look forward to that. You know, we talked then about, well, we've got a bunch of other properties both in the Athabasca and another deposit outside the Athabasca up in the northern part of Canada. And you know, there's an opportunity to sell those projects for cash and stock and sort of take a less dilutive approach to raising capital there as well. So we, you know, thinking about all of those things all the time.
Okay, and I guess what I'm trying to understand, I've been speaking to a lot of juniors, uranium juniors specifically, about how they move from just being a mining company to being a uranium company. And by that I mean it's not just about drilling holes. Okay, there's more to it than that. And obviously with NexGen, you were there a while. You kind of saw how that thing how it grew.
Sure.
And sort of built out, and the development process. And for juniors to really show that they can grow, you've got to be able to demonstrate that. And I guess you're saying with your board, association with NexGen and Cameco, quite frankly, between them, that's, you know, getting up past 55%, 60, 56%. You've got something to say that they haven't. I mean, is that why you feel it's going to be easy to go and raise money, because the market appreciates your connection with these guys, or is it you? Was it you? Your natural charm.
I wish it was just me. No, and it's never easy to raise money. I guess we look forward to a time when it.
That's what I'm asking, because you say we find it easy, and it's like it's difficult. But I want to understand what you're saying, which other people can't say.
You've got to do all of that preparatory work, and you know, it helps if you've got a discovery. It helps if you've got a team with a track record. So you know, there's a bunch of challenges to sort of get there, but. I suppose the last financing we did, firstly, all the way along, you know, we've all personally supported the financing, so we're all involved. And you know, when I think, as Richard Patricio was telling me last night, when you see the CEO writing a cheque for financing, you know something's going on. You want to back that one.
Have you been writing checks?
And I've certainly been writing checks.
Okay.
So that
for this company.
For this company.
Just double checking. Right. Okay.
No, absolutely.
So that's good. No, that's genuinely good.
And so you've got the major shareholder there doing the same. So Lee and the team of NexGen have backed us heavily, which is fantastic. And you know, I guess with all of that going on, we've got tremendous relationships with some of the, particularly the Canadian banks. So Cormark and PI Financial led that last raise we did. They gave us a $5.5 million bought deal. First bought deal of any size in the junior uranium space for some years. So that was, I see that apart from having the capital to do what we need to do, that was a bit of a feather in our cap.
But now you're moving away, you know, you're moving from big boy, your big brother, in the shadow of your big brother, you're now having to start delivering results, drill results. You know, your grades sound good with the last set of drills. That's fantastic. You'd expect that, but not guaranteed. You just expect it though. You've now got to stand on your own 2 feet, haven't you? You've now got to start showing that you're capable of doing this yourself. You know, so, you know, I know you've talked about some of the things that you've got planned. You want to maybe put 2 drill rigs out for this year. And what's your expectation of where you need to be at the end of next year? What do you need to prove?
Yeah, very, very good question, and it's sort of key, isn't it, really? You know, I would expect that we want to see that deposit grow substantially. We want to be well on the way to, with all of that resource delineation drilling, well on the way to having a resource defined.
Okay.
And then, you know, it wouldn't hurt to see a bit more scale to what we've got there as well. So we've done some aggressive step outs that support the next phase of work. So, you know, I'd like to see us a sort of where we really need to be is well on our way to having a resource defined.
Do you get that for $5 million?
Look, I think a really good question. Of course, this sort of Athabasca unconformity related mineralisation is typically quite drill intensive, a little bit like a sort of you know, epithermal vein gold deposit. You do have to do a lot of tight space drilling. But I think, you know, with about $5 million of drilling, we're going to know very clearly where we stand.
Right.
And, you know, hopefully we'll have something of a discovery. Of course, these deposits occur along structures in a sort of string of pearls, as people like to say. You've got down to our southwest, Cameco's Rock Zone, very high grade. They drilled a hole there, 7 metres at 30%. You've then got their Rock North Zone, our Hurricane deposit, and then these other mineralised intercepts along that structure. So we want to get out and test some of those as well.
See where that's going. So we need to remind people, you just started.
Yep.
Usually it takes 10 years to build a mine.
Does, that's right. Well, you can do it quicker than that.
Okay.
We were talking before.
Yeah.
You know, we built a coal mine in far eastern Russia. We took that from discovery to production in 4 years. So you can do it
coal,
faster
right?
than that. Coke and coal. Yeah.
Coke and coal. Right. Different ball game.
Well, look, uranium, I think, you know, that's a sort of a bit of a controversial topic at the moment because, you know, you've got some of our competitors, NexGen's competitors in essence out there saying that it'll take 10 years to permit and build that mine. I think that project will get built a lot faster than anyone.
Okay, so let's give you 7 years. Let's give you 7 years. Okay, for the sake of argument.
I think it'll be faster than that.
Okay, but you're in exploration stage. You've got a bunch of things to prove to the market by the end of this coming year. $5 million might get you there. Let's hope it does. But for shareholders, you know, you've got a lot of institution in there. You've got to get a bit of retail in there. And I know you've been talking to market. Just get people excited. It drives liquidity, right? So it's an important thing. Is, you know, to that audience, you've got to explain to them the process of getting from here to production. It's a long way, whatever it is. 5 years then, okay? It's a ways away, but you know, why come in now? Why look at IsoEnergy now in relation to a whole bunch of other Athabasca juniors who we've been talking to and we've heard it all, but you know, you've got to do it. So you know, why you?
Good and tough question. You know, you see what the guys are doing at Arrow. That's our approach. We're following that NexGen template. Of course, it took us, I think, we discovered that deposit in sort of 2013-14. It took about 2 years to get the maiden resource on it, then another year or so before we moved into that development phase as well. So we've been working on this project for 6 or 7 months now. So we're at the earliest of stages, I think. And of course, you know, the deposit has to stack up as something that is an ore body that can be mined. So we've got to get to that point before we understand, you know, but we know beyond that those next steps. We've done it before. You know, we've got a track record. When you know, every company I've been involved with and started, we've always taken the approach that we're not only explorers, we are developers and operators. Right. And that's what we did at Tiger's Realm Coal in eastern Russia. Okay. Now in production. So we take that approach. We've got that track record of doing that, so we're pretty well positioned to. Okay.
Well, there you go. I mean, first up, that is a differentiator for sure compared to some of the people we've been speaking to who not done it before. And this, like I say, mining is mining, but uranium mining is something else. You know, you need to have the team have been there, learnt, and you've got a lot of the right people around you because of the NexGen thing. I think that's what people are giving you a lot of credit for. So you think people should come on board. That's the differentiator. You're one of the better juniors to get involved with.
Well, you know, I think our track record it speaks for itself. Yeah. The reason to come on board as an investor now is that, you know, we've got a $35 million market cap. and we're the only junior with a high-grade uranium discovery in recent years. And so, you know, you look at that NexGen share price chart, 5 cents to, you know, got as high as $4.60. That's the ride we're taking investors on.
50 cents?
Trading about 50 cents.
50 cents. Yep. How many shares did you say?
68 million out.
68. You're going to dilute a bit to get through the next 12 months. A little bit?
Yeah, probably a little bit. That's right.
Price appreciation will do a little bit for you.
Yep.
Yeah. And then you've got to deliver a whole bunch of results. It's quite easy, really, isn't it?
Not too bad. Pretty
game,
straight.
Right?
Yeah, very straightforward. Yeah. Exploration is very simple.
That's what I thought. So your message is you're happy with the asset that you've got. You need to understand more. Watch this space. You are going to raise some money to get you through the next period. You've still got the support of the big guys, NexGen and Cameco. In this outlook is quite positive.
Yep, no, very positive.
Right.
So, you know, the thing I'm most excited for, and I think, of course, we've got a little bit of news flow to come out over the next couple of months because our last news release was only scintillometer results, so we've still got some more assays to come out, and then, you know, the rest of the news flow for the year will be about planning for that next drill program. Okay. And then look out for some more results coming early next year.
I don't think there's much more to say. We kind of like the story. We like your approach to it, and we like the people you're surrounded by, and the fact that you've been there and done it before. That does mean a lot. It stands out a lot. Why don't we get back in contact when you've got your plans laid out, and some of those results back through, and we'd love to hear from you again.
No, sounds good, mate.
For sure, mate. Craig, you're a star. I'll let you get over to your Cameco meeting, right? That's way more important than us.
No, not at all. But anyway, we'll see what they've got to say.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.